Welcome back to the Discovering Commercial Real Estate podcast. Our guest today is Ben Haghani. Ben Haghani has been a real estate investor and operator for over 18 years and has been actively involved in all stages of building acquisitions, renovations, leasing, and asset management. Ben is currently the president of Steelpoint Property Group and the chief revenue officer at Block.a. Ben, thanks again for coming on. It's a pleasure to have you here.
Hi, John. Nice to be here.
And before we get into the juicy stuff, let's hear a little bit about your background. So where did you grow up and how did you get into this industry?
I grew up in Great Neck, Long Island, which is just outside the city. Real estate was a household topic. My father's in the business, and he would talk to us about it at the dinner table. And when I graduated from undergrad, originally I was going to be in the technology world, and I joined a company called Accenture. Spent 1 year there doing management and IT consulting, when I decided that wasn't my path, and went back to, let's call it the roots, and went into real estate.
Great, amazing. And so, what do you think you'd be doing career-wise if not commercial real estate? Would it be technology?
It's a great question. I am working in the technology space today and real estate, so I'm already doing both.
Right.
If I were doing neither, I'm gonna throw you a curve here. I would probably be doing something in photography.
Okay.
Because I just love that.
Interesting.
But if I could figure out how to make a living out of it,
Right.
I'd spend my time with my family and photography.
That's awesome. That's
Yeah.
great. And so you're a chief revenue officer at Block.a. Can you give us a breakdown of what Block.a is and what's the gap filled in the market by Block.a?
Sure. So Block.a is a PropTech company. It's a property technology company. We have created multiple distinct pieces of technology that we have built together to work seamlessly to revolutionize the residential leasing process.
Right. And I think you offer a very valuable perspective within the company because you're the end user yourself. So what kind of perspective and what kind of pain points do you offer to the company that kind of the company uses to grow and be better?
Sure. So I'm as you mentioned, I'm a landlord. I'm an owner,
Right.
which is a client of the business
Right.
that I'm the chief revenue officer of. So I offer that unique perspective, right? A lot of businesses, as they're building and understanding their client, has to look outside, even if
Right.
it's within their own clients. I think one of the benefits I bring to the company is that I am the client.
Right.
So I'm able to understand that perspective. I'm able to offer that perspective before our clients will look at us and
Right.
say, hey, why don't you offer this? This is a good idea, which, by the way, of course, we welcome that. And they're always going to see things that I don't.
Right.
But I put that pressure on myself to identify them before our clients will ever think about it. And suggest it.
So you're conscious of the pain points that you currently face and that you face on a daily basis, and you kind of take note of that and bring that to Block.a.
Exactly.
And what pain points do you currently face that do you think are not solved by anything in the market
Within
like PropTech?
Within
residential?
PropTech, it's a great question, and there are several companies that are working at it. It's not something that we're touching at Block.a at all, but I think maintenance requests is probably within PropTech, and that really is a management angle. But I think maintenance requests, oversight, completion, all of that is an area where there are a lot of companies that have come up with solutions.
Right.
And I have not done extensive research here, but from what I've seen and what I've interacted with, there hasn't been anything that's knocked my socks off.
Wow. Okay. Got it. And over the past, so you've seen the progression of Block.a and how Eris Cohen has kind of come in and applied his perspective to grow the company. What advice would you give a PropTech entrepreneur who wants to do the same thing and build something that provides value to the marketplace?
Great question. I think the answer is in your question, right? The word value is built into your question. So I think the most critical part, number one, is to go deep within a certain vertical, to understand an industry or a discipline, understand it at its core, and understand where you're creating value, such that most real estate owners are not the type that welcome heavy integration and heavy lifts. They just don't want to deal with the headache. They want things to work seamlessly. So for someone coming into PropTech specifically, I would say to be very cognizant of upfront costs,
Right.
upfront headache. What is this going to cost me? What kind of integrations do I need? And then you need to prove in a deep quantitative way how you're adding value to your
Right.
client.
So zero into exactly what the gap is that you're filling in the market, and kind of apply your intuition and knowledge of the market to fill that gap and present that to the owner and show them and put yourself in their shoes.
Right. And quantify it.
Right.
So if you just go in and say, "Hey, we're great. We we manage your property
not
really
enough.
well," cool.
Right.
That there's no meat to that. So you got to give me numbers.
Show the
Like, what are
numbers.
you going to do for me? Give me metrics. Give me quantify
Right.
your value add, why I should work with you, and ultimately what all owners are looking for. And I will say most owners are not just focused on ROI. It's a lot about relationship. It's a lot about knowing that the person will be there at the end of the
Of
day.
course.
So if you just go there and all you talk is 2%, 10%, $8 million, you're missing a little bit of the point where a lot of real estate owners, especially in this city, have owned real estate for many, many years, some for many generations. So if you're talking to them, you have to know that you're coming up against their relationship that precedes them, their relationship that was their parents' relationship or their grandparents, and the grandparent of the person you're talking to was involved with the property before you were. So you need to come in both with a credibility, a trust factor, and then you need to back it all up with serious quantitative results
Metrics.
that you've already achieved for others, and then suggest how you propose to do that for your pitch.
Perfect. 100%. And how does creativity play a role as a PropTech executive? Can you think back to a time where you chose to think differently and think out of the box to solve a solution for a problem that your clients were having?
Sure. I mean, I would say that our entire company was built with that thought, where and it goes back to the founder's story, where the way we were founded was our CEO was going to see an apartment, and he waited for an hour in the snow, and it was freezing cold, and the super didn't show up, and the broker didn't show up, and he just dealt with this horrible situation, which is very, very common in New York. Like, most people would just say, like, you waited 1 hour, I waited 2 hours, cry me a river, right? Like, that's the like New York City real estate experience. And what was born out of that was this entire company of like, it shouldn't be so difficult. And then, I mean, we're constantly innovating. Like, we launched internally, we used our data team to launch first ever comp report that allows us to do it instantaneously. So we plug in a building address, a unit number, and immediately, and I mean 10 seconds later, you have a comp report with a recommended price for that unit and the comps to support it. So that was when I first joined. I said, like, look, our team is spending too much time here, and this is something that if we're able to crack this, no one else has touched it. No one else has been able to. It's not even our business. It's like a small percentage of the time our team spends. But if we're able to do it, we're able to reduce our time and create major value for our clients.
100%. And are there any other processes that you guys are kind of working on at Block.a to automate certain aspects of the business?
I mean, every aspect, right? So, there again, it's literally every aspect of the residential leasing process. So from AI leasing bots that are able to immediately reply in real time, to questions asked by prospective tenants, to scheduling tours. If someone wants to see an apartment using the Block.a app, you're either able, if the apartment is already vacant, then the person who's interested in touring the apartment, we'll call them the prospect. Prospect is able to just download the app, go to the apartment, and let themselves in. That is automation.
100%, yeah.
And then if the apartment is occupied, they're able to go into the Block.a app. Again, once verified, they're able to see the available showtimes, click on a button, and book their appointment.
That's perfect.
Yeah, it's cool.
And what do you think is next for PropTech? What do you think is going to be the trend that everyone jumps onto in the next decade?
Oh, it's such a good question. I mean, we're at such an early stage of the prop
Right.
tech game. Um, it's a big blue ocean, as they say. It's wide open.
Right.
It's what attracted me, frankly, to getting involved in the space. It's like buying real estate in New York City and then in like 1905.
Yeah.
Like we have so much growth, and it's really in every space. Like from property management, underwriting and due diligence, construction tech. Like most of the money being focused on construction
Mm-hmm.
technology is on ground up big buildings. But how about like, for a New York owner, a local
Operator.
an alt 2 job where it's a smaller renovation?
Right.
How about those types of renovations where it's just 50, 100, $200,000 renovation? There's no real tech that solves that any of those spaces
100%.
fully, and there are people working on it. So I'm very confident that in 10 years we're going to be sitting here talking about many publicly traded companies
Right.
that are forming right now or within the next 5 years or last 5 years.
And why do you think it has taken so long? Is it because you think, like you mentioned earlier, that property owners are slow to adapt to these trends and slow to adapt to these new technologies when they have systems that already work?
It's a lot of that. I mean, I think actually I am a New York owner, so I'm throwing myself under the bus here. But I'll say that I think New York is actually one of the slower markets
Right.
to adapt new technology.
Right.
And the reasons for that, I think a lot of, New York is a town where people have been investing in for decades and generations,
Right.
whereas and there's a lot of existing inventory here of buildings being traded. So you have people that have owned buildings for, again, many decades, and they're low leverage. They are making a good return. If you ask someone who's operated their business for 50 years and do very well doing it that way, hey, why don't you use DocuSign?
Right.
Like instead of getting a tenant that is signing a lease to come to your office to sign a lease, use
Electronically.
DocuSign.
Yeah.
It's like the simplest, elevation from email.
Right.
Like we went from like fax to internet, email. Okay, great, we're doing well. Go to DocuSign.
Right.
And they'll say, no. I won't do that. I need someone to sit in front of me to sign the lease.
Right. 100%.
Some people are just like to do things the way they've done them.
And do you think that landlords that are not kind of slow to adapt this are going to be left behind in the next multiple decades, where everyone is kind of just going to have automated processes for everything?
I do. I think when you look at real estate, obviously it's the largest asset class in the world, and what you know is that it's 30 years ago it wasn't even an institutional grade investment.
Right.
40 years ago, maybe more, but over the last few decades, you see more and more allocation from an institutional investor's portfolio to real estate. And what does that mean? Thinning margins. It means that we're trading on smaller margins. It's a more sophisticated asset class. And so, if you're not noticing the trends, and if you're not operating, at the best you possibly could, then your returns will just be less. And it goes back to, to me, it goes back to leverage. So if I'm low levered enough, I don't need the best margins in the whole world, and the next building can operate better. But if I'm making enough, I'll stick with what I got. But the trend obviously is moving in that direction.
100%.
And as new generations come into family-owned businesses, most of them see the benefit there to operate and make most efficient their existing assets. Why not? There's no reason not to reduce overhead, reduce operating expenses, maximize rent roll, and
100%.
be efficient.
Yeah, definitely. And I want to ask about how, so you did your master's at NYU for real estate. Looking back, what value did you gain from this program, and how do you apply this program to your career today?
I loved NYU. NYU, so it took me 5 years because I was doing it part-time. And for me, NYU gave me a lot of the basic building blocks that I use every single day. I get excited by looking at nice bricks. I get more excited by a good Excel
Right.
model.
Especially.
And my love for that literally became a thing during NYU.
Great.
And working through models, understanding that,
Yeah.
understanding capital markets on from a professor who is actively working as a debt capital advisor,
Right.
to me was priceless. So I loved NYU. I know you're at Columbia, so I'm sure there's great things to say about Columbia. But what I liked about NYU is, I don't know exactly what percentage it is now, but when I graduated in 2010, majority of the professors were adjunct.
Yeah.
And I don't know if that's
So they
still
were
the
in the
case.
field.
Yeah, which means they're actively in the field, which I loved. Right, my very first semester, my law professor was Matt Kassendorf, still a good friend, only good things to say, and he'd come into class, and he would not give us some template lease form to
He'd
study.
give you real examples.
He'd redact an existing lease that he signed that day or that week, and he would give us that lease, and he would talk about hot button issues today. Whether it was local law, CAM, what are the things that are important today that maybe weren't as relevant yesterday. So
100%.
To me, NYU was awesome.
Amazing. And do you think a young professional should do this program straight out of college, or should they work a couple years, get some experience under their belt, and then do the program?
It's a great question. I think the way I did it is all I know. I did it basically right out of college, but I did it part-time. And so I really loved that. And to me, it was a lot more real, because I was interacting. My economics class was in I want to say 2007, right before the Great Recession.
Right.
And my professor, Pamela Hannigan, who I'll never forget, would kind of told us it is an inevitability that we're going to head into the biggest recession this country has seen. Plan accordingly.
Right.
And I was actively doing deals at that time. I was buying buildings. I was doing a few different things then, but it changed the course of my career.
So you think programs like this are super valuable because you have mentors that are kind of 30, 40 years ahead of you who are telling you, current situations that you can adapt to and overcome.
Sure. Yeah.
And how did you learn the skills associated with being a leader? Is it something you were born with, or did you develop this as you went through your career?
Great question. I think I've always kind of gone in that direction. Right. I've always liked that type of role. I remember being in high school and they had a program for peer leadership, which the first time ever that you could do this was when I became a senior, and you'd come to school half an hour early on Wednesday mornings, and you would have a group of freshmen, this was in high school, that you would talk to. And, I signed up for it. Immediately, the first minute I could sign up for it, I thought it was just very cool, very fun to be able to give back. And
that's awesome.
And, if I've been able to learn anything and I can share it to someone so that what took me 3 steps takes someone 1 step, cool. 100%. So I've always liked doing it. And when given the opportunity, I've always gone for it.
Took the charge. And if you had to boil it down, what would you say makes a good leader and a good principal?
I think it's a couple of things. I think number one, you have to, and this is in no specific order, but you have to be very clear on what the company's goals are, your team's goals, how they support the company goals, your personal goals, and understand that in a deep way. Second is you have to listen. You have to listen to all of your colleagues, all of your peers, people who are other team leaders, those who are on your team, and listen and identify what they like, what they don't like. So first it's to listen, and then to boil it down to be able to create the culture, which is insanely important, and the environment that allows your team to succeed. Because if you're ignoring those things and just expecting them to do things, and then you're upset that they didn't solve the goal, that you didn't communicate and set, well, then you're going to fail. And also setting goals. That's a key one, right? It's not just company level goals, high level goals, but every person should have their own goals.
Of course.
And that's something to work towards.
And as far as setting up this culture, how do you go about, what are the steps you took to kind of help set up this culture within your company?
Step one, it's who you bring in.
Hire, yeah.
So it's bringing in people that are like-minded and have have something in them. It's not something that's trained or taught at the outset, day one. It's just someone with that kind of disposition or nature.
Right.
And number two, just bringing it every day, right? Like part of what we do at our company, every single Tuesday and every Thursday, we bring office to the lunch.
Great.
So like, it's remote. People are working a few days a week from here, there, whatever. Tuesdays and Thursdays, we all come to the office. Sometimes we talk shop at lunch, and that's okay too, if that's just a natural tendency of the conversation. But it's really just to like sit around a table and chat and get to know each other and spend more time with each other on a personal level.
100%. And what hard and soft skills should young people work on to prepare themselves for what they're about to come against in their career?
I love having, so one thing I'll say about hard skills and even soft skills, if it's worth doing, it's worth overdoing.
Right.
So a hard skill, if you're in a certain space, like if you are, you love the financial side of underwriting a deal, know Excel, know every single thing there is to know about Excel, go all the way deep into it.
Become obsessed with it.
So that when you yourself are underwriting a deal, you're able to create all the scenario analyses and understand what the refi in year 7 or that, know that cold so that you're fluent in that. Right. And soft skill, I would say, pay attention. I think that just being aware of the conversation, being aware of like the environment that you're in is really important. So it's not just like, what an expression I use, which I'm not a sports guy in like any way, and it's a sports expression, so it's funny who people who know me, but I always say move without the ball. Okay. Understand where the markets are heading or where your profession is going, and understand, is this the direction that I want to go in? Is this deal the right deal I want to do? Again, moving without the ball, right? So like if you love the hospitality market, what's the right play on that market? Understand what's happening. Should I go luxury? Should I go budget? Should I go mid-tier? Do I want to go franchise? Like understand the nuance there, and again, move without the ball.
I think that's so valuable for young professionals watching this. And I want to ask, let's say somebody wants to be a real estate entrepreneur, whether that be in PropTech or they want to be a landlord, they want to be a private equity sponsor, whatever it is. Would you recommend for them to work at a big shop like CBRE and JLL for a couple of years, or do it straight out of college and learn as they go?
There is a going straight out of college and doing it means that someone has the financial wherewithal, right? So that's kind of like, I would say, the first question, like, does that person have the ability to withstand several years of no income? Right. Or even, if you're investing in deals, it's not just no income, but you're investing in deals. You have to anticipate dead deal costs, et cetera. Assuming that's not a non-issue for someone, I'd say that the benefit of working at one of these, blue chip real estate companies is that they're giving you the building block foundation that you're able to then use for the rest of your career.
Of course. And,
like the JLLs of the world have been here for, again, generations. They understand things that if I'm a 22-year-old, I may not know those things. So there's a big benefit there. And frankly, there's a big benefit to making a career out of that. Right. I chose not to. That was just not the path for me. But I don't think there's anything, frankly, wrong with making a career of that.
Right. So you think even for somebody who wants to be an entrepreneur, it's beneficial to kind of have that fast track with like the JLLs of the world, where they kind of show you what not to do and what to
Sure.
do.
I will say that if someone has that entrepreneur spirit and they're willing and able to take the risks,
Right.
go take the risks. When you're 22 or something, that's your time.
Right.
I always say, like, part of our culture, our company culture, is to try.
Right.
And I'll take that a step further. If you don't fail, that is the failure.
Right.
Okay? That is if you don't take a chance doing something that you're not sure if it's going to work, then that, and if every single thing you do works,
Yeah.
then you're 1 in a billion, right? Like, that's amazing. There are ideas that we come up with all the time that I'll say, I don't love it, but we should obviously do it.
Right.
Right? Like, that's how you figure things out.
Do you think you learn more from failures than you would learn from success?
No, I I think common people love to say that. I think when something works and you feel something click,
Right.
there's something that you learn from that.
Awesome.
And yeah, and I learned, trust me, I've tried a bunch of things that didn't work. And when that falls down, you learn from that also.
100%. And walk us through what Steelpoint does.
Sure.
What kind of properties do you acquire, and what's the kind of business plan with Steelpoint?
Sure. So Steelpoint Property Group, I formed exactly 10 years ago. It is a value add real estate acquisition company. Historically, we've bought multifamily value add properties in New York City.
Mm-hmm.
The business plan that we've always held, and there's a couple of things here. The main piece of it is so I put it into 2 buckets. One is everything related. By the way, this applies to dating too. But number 1 is all related specifically to the property.
Right.
So it's 10,000 square feet. It's 20 units. It's got retail. It's got, taxes are 100,000. That's 50% of the store. All of that, there's a leaking boiler. There's asbestos in apartment 3A. All of that, which some people would call 100% of the deal, I put that at 50%. The other 50% of the deal is the story behind the bricks. So who owns it? When did they buy it? Why did they buy it? What did they do for the term that they bought it? If they only owned it for a couple of years, who owned it before them?
Right.
And then all of that is part of the story. But then the main piece, why is the seller selling?
Selling, exactly.
And to me, it's like, when I'm looking at a deal, I'm looking at the property address and I'm asking the story.
Right.
Those are like the 2 most important pieces for me. And then we'll get into square footage and value add potential and all that.
And what question do you think buyers sometimes neglect to ask sellers? Is it that question of why are you selling?
I can't speak for what most buyers aren't doing.
Right.
I mean, that's to me like probably one of the most important pieces of any deal. It's like, why is that seller selling?
Yeah.
And it doesn't mean it makes the deal good or bad. It's just to understand how the property was treated during their term, right? Before I ever lay a foot there, if you tell me that it's an absentee owner, it was owned by the person's predecessor, that person passed away, the owner is now absentee, there's a property management that's like a smaller shop, the super is off site. You hear certain things. Right. You don't even have to show up to the property and you'll say, okay, there's mismanagement here. Mismanagement is an opportunity and it's a liability. So you have to understand and put a price on that.
Got it.
I like when there is that, but sometimes the liability is just too large, and the seller is not in touch with the size of that liability and not willing to come to that reality.
Understood. And how much would you say of understanding the story comes down to the numbers? You mentioned all these other aspects of the building, understanding the story, like in terms of why is the seller selling, stuff like that. So how much of it comes down to NOI cap rate?
None of it. The story all leads to opening your eyes before you get to the building, before you really underwrite it. And then, specifically, I've been a multifamily buyer. and since 2019, the paperwork is like meaning the legalization of destabilizing units
Right.
is the story. So understanding that.
Got it. And what value add strategies does Steelpoint employ that may be seen as unconventional or like out of the box?
So first, in terms of like what I look for as part of like, I will not do a deal unless um, I underwrite to a 3x
Mm,
on rent growth. If I don't see a 3x on rent growth potential, out of the gate, it's not really for me. If something is severely mismanaged or if it's mismarketed
mm,
and I'm able to buy it, cheaper,
right.
then I don't necessarily need to get that 3x. In terms of value add strategies, it's pretty simple, right? There's not a ton of magic here. Um, it's maximizing your rent roll while trying to reduce your operating expenses.
100%.
One area that I focus a lot on that I think is low hanging fruit is water, and a lot of owners try and when they buy a building, they look at the water expense
Mm,
as either a fixed expense or it is what it is. I look at it very differently. I had an experience 15 years ago with a building where the water bill was, I want to say it was like $140,000, $150,000,
wow.
something. And when I understood the metrics of that building, I said, this is way too high. And I was looking at my operating bills and I was saying, this is way too high. It was a building we had just bought.
Right.
So I didn't have operating history to judge on. So then I started a program. So I looked at every single unit. I had my super go through all of our common areas. And I got that bill down from 150,000 down to like $50,000.
That's awesome.
Something like that.
That's great.
So $100,000 in reduction in OpEx. You put a 5 cap on that. I added $2 million in building value,
Right.
even though in that market it was probably like a 3 or 4 cap. But at a 5 cap, I added $2 million in building value by focusing on water.
Just the water, yeah.
And
That's
since then, again, that was 15 years ago. That's like one area that I go into, and I also have this feeling on water. It's like the devil, right? If there's a leak, you're losing money on the water. You have damage to the unit. You have damage to other units. You have potential mold and health concerns for your tenants. So to me, if I hear a leak, I go crazy. I say a leak should be solved within minutes, not hours.
And would you say that over time you've kind of been better and better at picking up on these small things, like such as water, these small things that you can go in and add value in?
Yeah, I mean, the more you are involved in a certain space, the more you're going to see the nuance, and you're going to understand where you can bring and add value to it.
Right, 100%. And I saw on Steelpoint's website that the company employs an entrepreneurial style, which allows you to act quickly and reactively to the market and deal level situations. So walk us through what this means and how do you leverage this to achieve above market returns?
Sure. So we're not a fund. It's all the capital we raise is always private, and it allows us to be nimble. So I've closed deals in weeks, and where others would need more time. I've signed hard contracts in weeks, where again others would have asked for diligence, would have taken their time for it, etc. So it's about having capital available to you, and I'm a syndicator, so it's not just my own capital. I'm putting 5 to 20% into any of my deals, but it's having the right partners that believe in you, that you've earned their trust, so that when you say it's a deal we've never talked about, you've never seen it,
right?
I need a hard deposit to come in with me, or I've already signed the deposit, I've already signed the contract, I've funded a deposit, and we're closing in 45 days. Yeah. I need you to come in with me. You need to have built that credibility with your investors that believe in you.
Of course. And
which, by the way, as many times as I've done it, it's so much easier to invest your own money than someone else's. It's as many times as I've done it, and thank God always successfully, it's still like you'll take much more risk
Yeah.
with your own money than you would with someone else's.
You can be way more aggressive because with an investor, you're worried about them losing their money and your reputation and stuff like that.
Exactly. Yeah.
So do you do any development nowadays, or is it all just acquisition?
These days I'm focused on Block.a. So these days my majority of my time, 90% of my time is focused on building and growing Block.a.
Right.
And then managing the buildings I own.
Okay, 100%. And how do you go about setting concrete goals for yourself and for your company?
So first, I think that there's two different answers. So Steelpoint has a different goal setting parameter than Block.a.
Yeah.
So Steelpoint, it's my own company. Frankly, if I don't do any new deals in a year, it doesn't matter. Like it's up to me to decide if I want to do deals or not.
Got it.
But for Block.a, setting goals is not as easy as you think. If you asked a group of 10 people, come up with personal goals for yourself, whether it be like number of times I'll go to the gym this week. I tend to think in health related things when I think about goal setting, but like journaling or like exercise or diet or whatever, tell anyone to set a goal. Most people will set a goal that they probably won't achieve, not because they didn't work hard at it, but because we're always setting goals that are probably a little too far out, right? So like my goal is to go to the gym 4 times a week. I've failed this goal for the last, 8 months, which is how old my daughter is. So I failed this goal. Like I just have totally missed that goal. Right. So yeah, I think setting goals is a tricky business. And what I like at a company level is that we're setting goals for the company that we're then debating internally. So when you have like an accountability partner in your goal, again, let's say your goal, John, is to exercise 4 days a week. Just let's say that's it. If I were your accountability partner on that, I'd call you. Did you work out today? No? Well, that's your second no this week. Your next 5 days, you have to work out 4 out of the 5 days. You have someone that's checking in with you to make sure it's happening. Right. For a company level goal, setting those goals, you have some history. So you have some idea of understanding what you're able to achieve. But more importantly, you're able to understand that by setting these goals, what levers you're then creating for the future. So we're a VC-backed company, Block.a. Yeah. And in order to raise our next round of funds, we need to meet certain metrics. Right. So I wouldn't say that the company is building to just solve for that, but that's important. You need to answer to what the market is expecting of you in certain regards. So measure your success. Like if you're able to succeed in this way, what will happen? So like one metric we don't track, it's not a main KPI for us, key performance indicator for Block.a, is monthly users. It's not the thing that's the most important thing for us. Right. Is it very important for us? Absolutely. But is it top 3? No. And coming to that decision is something that we'll debate as a company to decide that.
Got it. 100%. Interesting. And what idea do you believe, whether grounded in data or intuition, that many people you respect disagree with you on?
It's a good question. It's a great question. I'll go back to Steelpoint to answer this question. So that's the real estate acquisition side. Yeah. So a common adage about real estate is it's all about location, right? Like that's like something everyone you'll say, whether it's your grandma who lives in Tulsa or a New York City seasoned real estate investor. It's about location. I disagree. Okay. I think it's all about timing. Timing. If you look at the vintage of a real estate deal, anyone could just say like, that guy made a lot of money or not a lot of money. Right. Again, there are exceptions to every rule. You could buy it cheaply at a hot time in the market. You could pay too much at a low point. There's always exceptions to that rule. But vintage often tells you a lot about what was going on in the market and assuming it was a market rate deal, vintage tells all. So I think while it's impossible to time any deal to the right point in the market, understanding that is kind of, that is the tide. That is what can right your wrongs as an operator, as an investor, and it can right your rights, right? Like you can be the best operator in the world, and if your timing is impeccable, you'll be triple successful.
And do you think that with more and more experience, your timing gets better, or is it based on luck mostly?
I have a thing against luck. I don't like to believe in luck because then it suggests that someone may have an advantage over me or vice versa for some cosmic force. I believe in believing. Don't get me wrong. I believe deeply in believing. I do think there is power in that. But I think that I do think that doing something more times is something that gives me an advantage to understanding a little bit about what could happen next.
Right. Understood. And how do you recognize an opportunity that you want to go big on? Is it based on data or is it based on intuition?
Great question. And this was something that, I learned from, one of my first jobs where I was working with a very large real estate investor in New York. And, I was at NYU and I was getting my master's degree and I was learning Excel. And again, I'm an Excel guy, right? So I see a deal, I'm putting in Excel, I'm underwriting it, 5-year forecast, doing all of it. And I'm like, it was probably the most ugly model now looking back on it. But to me, it was like the coolest thing I've ever done. But I do all this modeling, I don't sleep for 2 days, come out with a number, $30 million, right? I take it to my boss, my partner on that deal actually, and I bring it to him and I say, we're looking at this deal. And he looks at it and he goes, $30 million. And he did it in 4 seconds. I said, whoa. Wow. It just took me 2 days to get there. Where are you coming from? I think that having a gut feel of numbers and having seeing the numbers and seeing the potential of an opportunity is something that grows as you do a couple of deals and you get a little bit of your arms and head around how things should work. And then underwriting it, I think, is important too. I think what's interesting for me personally is being a numbers guy, being an Excel guy, and then coming into VC-backed businesses. For the first several years of a business, you're not using Excel to underwrite your deal. There is no underwriting. The intuition is your underwriting solely. And it's been interesting for me coming into the space where I would say that I never didn't use it, but I never used it exclusively like I am today at the stage of the company we're at with Block.a. But now we're growing, so we're able to actually put that quantitative analyses against how we're operating, and then we're able to see 100%. Our future.
So do you think at Block.a, when you first joined, it was kind of out of your comfort zone to be fully intuition based, fully belief based? Because in the past it was different.
For sure. I mean, there was a lot that was out of my comfort zone when joining Block.a. It's a technology company, right? The technology is aimed at improving real estate and property, which is, I know that second part really, really well, but being part of a technology company was totally out of my comfort zone. I love it. And the learning curve was extremely steep at first. And there are still things that I'm learning every day, but if we're not good at stepping out of our comfort zone, then to me, that's a missed opportunity.
Yeah, I agree. What has been the most difficult point in your career, and how does that shape you as an individual from that point on?
Most difficult. So it's funny. I mean, I've had a couple of points that were very difficult. I'd say that coming out of college, it was still I graduated 2003, and we still had the the remnants of the dot-com burst, 2008, 9, 10, that was the Great Recession. I've seen some cycles. I've seen some different points in the market. To me, I think I would say like the hardest point in the market was June 14, 2019, when the rent regulation laws changed in New York City for multifamily owners. And to me, it was, the rug was pulled from under us. And it was all I did, right? That was all I focused on. So now all of a sudden, the risk profile of the deals I was looking at, and I had $60 million worth of deals under contract at that time, not hard contract, thankfully, but I had $60 million deals that I was ready to buy. And obviously I backed out on 100% of them. Right. I haven't bought another building since. And to me, that was a very hard thing to say that the thing that I've been training for, that I've been doing all this time, the rules of the game have changed. So real estate as an asset class, still the best asset class to own, period. Yeah. Real estate in New York City, to me, it's the most kind of resilient market in the world. Infinite downside protection from a rent perspective. Like there is so much demand to live here. Occupancy, other than COVID, is always hovering in the upper 90s, right? So like as an asset class and as an investment, it's still a sound choice. But from a value add perspective, it got laced with a whole bunch of risk that I felt at that moment very uncomfortable with.
Understood. So how important are politics in the real estate game, and how do you position yourself to protect yourself when the government comes in and does something like that?
So politics, local politics are not important until they are. I would say that prior to 2019, the real estate industry as a whole didn't really, we wrote our checks to CHIP and to some other landlord lobbyist groups, but we're not so politically involved. Post 2019, there's a new movement in town because they're seeing a lot of this legislation really come down. So New York City real estate owners are used to, like new local laws, new taxes. But when legislation starts discussing taxing vacant retail space, like, whoa, what are we doing here? It's getting out of hand. Good cause eviction, which is another term for universal rent control. When you understand how legislation can seriously harm your real estate, then you become a lot more aware of it. And I certainly have. So it's very important to vote, stay aware of where politics are going and how it could affect your real estate.
And do you think it's ever going to shift in the favor of because right now it's not in favor of the landlord. Do you think it ever will shift in that direction? And what needs to happen for it to go that way?
It's a great question, and probably politics in general are always seesawing, right? So it goes too far in one direction, then it goes in the other. There are many who believe that there will be a full rollback of the 2019 regulations. I'm not so confident. I don't know. I operate in the environment that I'm in, and I use this as the framework to decide whether I want to proceed. What happens politically from here? I don't know. I think it's moderated a little bit since 2019, but the future is very much an unknown.
Yeah, got it. And how do you vet business partners? What's a telling sign that you should or shouldn't work with someone?
The first most important part of anyone you work with is you have to like them.
Right.
You have to respect them. Right. You have to trust them. To say that, we'll have an agreement, who cares? Yeah. Agreements, if you're looking at agreements, you've already gotten to a bad place. Yeah. So respect the person you're working with, like the person you're working with. That's step one. 2, what the papers should say, and more importantly, the spirit of the deal should be an alignment of interests. So pick a business partner who wants what you want. If you're looking, let's just say, to buy an office building, and your vision of it is that we're at a low in the office market, and in 7 years from now it'll be great, and this is just an arb on timing. Don't get an investor that's looking to
That's
do a
not aligned,
quick
yeah.
flip in 6 months. Again, if you choose to do that together in 6 months,
Right.
great, and it makes economic sense and you're in alignment, great. But on day one, you should be in alignment of interests, of goals, and the paperwork should support
Right.
that.
So for you, the number one thing is alignment of strategy. Day one, you have to make sure that's.
Is to like the guy or girl or
Okay.
gal.
Okay.
Is to have a professional liking
Right.
and respect for them,
Right.
and hopefully some sort of value add. And step two is to have that alignment in strategy and business plan.
Great.
That you support one another. Again, knowing that you're by its very nature dealing with a constantly shifting macro micro environment. So if you believe the timing is right to sell after 7 years when you projected 3,
Yeah.
okay, that's okay. You're allowed to deviate the plan,
From the- yeah.
but have the plan.
Yeah. Got it. Understood. And who were your role models and mentors when you were coming up in the industry?
Maybe Larry Silverstein, I'll say. I mean, it's a guy that's just stood the test of time. So if I had to say someone, he was also, I'm involved. I went to NYU, which he's very involved in. I was part of UJA for many years, which he's very involved in.
Right.
And he's just I love his attitude. Always positive, always making really big bets. And just again, he stood the test of time, right? Like he's done it. He's been building for so many decades. You got to respect that.
Right. 100%. And I saw on your LinkedIn that you were a member of UJA since 2007, January 2007. How important are organizations like this for finding these mentors and finding these people that you can look up to and they can offer you advice?
I mean, all business as a whole is all about people, right? Anyone will say that their business, whatever it is, we're sitting here in a studio. The owners of this studio will say it's about the people. It's not, I have the nicest microphone. Someone else has the microphone. It's about relationships and people. So if you're going to be successful in any venture, you need to be aware of what other people are doing. You need to surround yourself with the best people. You need to be engaged in sophisticated, elevated conversations. And the only way you're going to do that is by meeting people, and networking groups as a whole are great.
100%.
I like UJA. I like other philanthropic / networking groups because it's a double benefit, right? You're supporting a really good cause and then benefiting, yourself through networking.
Understood. And what would you say drives you nowadays? Is it money, personal achievement, family, or philanthropy? And when would you say you've succeeded?
What motivates me today is my family, I would say, for sure. Thank God I'm married. Thank God I have 3 beautiful children. And for me, it's what motivates me is just doing things that hopefully will make them proud of me, and can provide for them. So that's entirely, that's a big part of what motivates me. I don't see success as an endpoint. I see success as a mindset and a daily way of approaching life.
Right.
I define success as growing. So by its nature, I don't see an endpoint for that. Like
lifelong journey.
If I had reached all the financial goals I had ever set out to achieve, then that's okay, great. But to me, success is defined by growth.
Perfect.
So it's growing spiritually, mentally, physically. My 4 times a week at the gym, maybe I'll start doing that at that point. But that's how I define success, as an ongoing pursuit.
Amazing. And I have my final question to wrap it up.
Cool.
What advice would you give your 22-year-old self about life, business, and relationships?
What advice would I give to my 22-year-old self about life,
business, and relationships?
Stay positive. Always be the best version of yourself. always, I can't say that, always be the best version of yourself. So again, dating, marriage, being a father, parent, um, reaching whatever level you want professionally, be the best version of yourself. So work really hard, work really smart first, then work hard, and always look to try and be the best version of yourself.
Amazing. Ben, thank you so much. This has been super valuable. I hope that young professionals watching this will get some value from this and apply it to their career moving forward.
Amazing.
Thanks
Thanks
again.
John. Appreciate it.
Great.